Hello, everyone, and welcome. My name is Catalina. I will be the host of the following conversation. I'm very excited to be here today. We have a very special guest, Dan Morehead. He is the CEO and founder of Pantera Capital. Hello, Dan. How are you today?
Great. Thanks, Catalina.
Okay, so we have many different topics and questions to cover and a limited time. So if that's okay with you, we can jump right into it. And the first topic that I would like to cover is Bitcoin and altcoins in 2020. Because back in May this year, you said in one of your interviews that usually Bitcoin performs better than the rest of the market in times of crisis. And now that it's been 4 months since the crisis started, how do you think Bitcoin will continue performing in 2020? And do you think altcoins will start regaining market share soon?
Yeah, it's a great question. And in the history of Bitcoin, there have been 7 big bull and bear markets, and altcoins have been part of it for about half of those. And we've seen in a typical crisis environment, Bitcoin typically massively outperforms in the early months of a crisis, especially in a very steep downdraft. There's a flight to quality mentality, people trying to stay in the mega cap of the industry. And smaller things are less liquid, and so if people have to sell things, they go down more. However, in history, it's taken about 4 months until the Bitcoin dominance, which is the share of Bitcoin as a total market share of the entire industry, has typically peaked within 4 months and then gone back to normal. And we've actually just seen that. It's been about 4 months since this crisis started, and Bitcoin dominance peaked in the middle of May. It went up about 4 percentage points, and now we're right back to where we started in early March. And it's our opinion that these altcoins, and particularly smaller cap smart contract tokens, are going to outperform Bitcoin over the next couple of years. And again, we think Bitcoin's going to go up a ton, but altcoins are going to go up even more. And the example is Bitcoin's up about 30% year to date, which is amazing, given that equities are down and real estate's down and almost all assets are down in price. But other things in the cryptocurrency space are up much more. Ethereum's up 80%, and then other smaller projects like Augur and 0x are up 100% on the year.
All right, excellent. I think that is a question and topic that a lot of people want to hear from you. And the next topic is the current crisis and pandemic. And for this, I have the following 3 questions, actually. So how has venture investing in crypto particularly been affected during this crisis? Has it been positive, negative, and why?
Yeah, so financial crises obviously kind of slow the markets down, a lot less transactions happening. But in the long run, it's the best time to invest. And there's a study by Cambridge Associates on the general venture markets, and the return for all the vintages prior to the last financial crisis, 10 years coming up to 2008, was about 6% IRR. But the 6 years right after the crisis were 3 times that, so 18% return. And we think that's going to be the same in the cryptocurrency venture space. The crisis itself had a big slowdown. There have been very few transactions happening in the last 3 or 4 months. But the transactions we're seeing and we're doing, and we've executed about 4 since the pandemic started, will probably be some of the best transactions when we look back 5 or 10 years from now.
Okay. And how has this economic crisis affected companies in your portfolio specifically? Also, do you have implemented certain business models that you didn't used to implement before?
Yeah, so I love that question because it's highlighting why Bitcoin was invented and why other cryptocurrencies exist. Satoshi Nakamoto invented Bitcoin as a response to the last financial crisis. There were big bailouts for banks, and Satoshi wanted to create a currency that was essentially exempt from all the issues of moral hazard and money printing, and would be able to function without these so-called trusted intermediaries that often fail our trust. And I think that Bitcoin essentially was born in the last financial crisis, but it's going to come of age in this one and really will prove itself. And we're already seeing it. The companies we're invested in that do cross-border money movement have seen a very sharp increase in their volumes. Traditional money movement companies, including banks, are very difficult to access during this pandemic. Many of them have shut down their branches and made it very difficult to use. But cryptocurrencies are essentially native on the internet, so they're very easy to use, even in a barrier to entry issue like this pandemic. And it's very hard to get data on that as a normal investor. So we've polled our own private companies that we're invested in and created an index of 7 of them that do cross-border money movement using Bitcoin. And those companies have seen an 80% increase since the end of last year. And to my mind, that's excellent proof that Bitcoin is really becoming useful and proving itself in this stressed out era that we're in.
Excellent. Are there any specific projects that you are excited about for 2020?
Yeah, so that's one of them. We're invested in exchanges and cross-border money movement companies. For example, we're invested in a company called Bitso in Mexico, which is now doing about 5% of all cross-border money movement from the world back to Mexico. So, it's really helping real people around the world. And we're invested in about a dozen of those around the world in all the different regions. And those are all doing very well. Another big theme for 2020 is scalability. That the first 2 biggest blockchains, Bitcoin and Ethereum, do about 10 transactions per second. In order to be very useful, they have to do thousands or even hundreds of thousands of transactions per second. So we're invested in 6 or so companies and tokens that are allowing scalability. And I think in the next 12 months, you're going to see those either prove themselves out or not. And so we're very excited about the scalability companies we're invested in.
Okay. And last question regarding the current economic crisis is, in your most recent letter, you discussed how recovery to pre-crisis real GDP may take many years to achieve. Can you tell us a little bit more about that and why?
Yes, I've spent 35 years doing global macro investing and thinking about global macroeconomics. And I just am worried that a lot of commentators and even policymakers are talking about a V-shaped recovery, that somehow, this is all going to kind of go away and the economic impact will be very short-lived. Unfortunately, I think it's going to be with us for quite some time. And as an example, the last crisis, 2008-9 global financial crisis, which incidentally was the only global recession we've had since World War II, it took 3 years to recover the level of GDP we had prior to the crisis. This is obviously much bigger, much steeper, and potentially ongoing, either the physical effects of the virus itself or the lasting psychological effects. It's something we haven't dealt with in 100 years. So I think, unfortunately, that means that GDP won't recover its previous high for at least 4 years from now. And the reason that's important for our investing is that means we're going to continue to see more and more financial stimulus plans, monetary stimulus plans, all of which are going to increase the quantity of paper money, which should push up the price of things that cannot be increased, like gold or cryptocurrency.
Okay. Now I would like to focus on the blockchain space in particular. And you, with so many years in managing institutional capital in the blockchain space, how have the different avenues for blockchain exposure evolved over the years, in your opinion?
Yeah, I like thinking back to the early days that, we were the first investment firm in this space and we had only one fund, and that fund had only one asset in it. Pantera Bitcoin Fund was a very simple product. And so selling that was difficult. Asset allocators want to build a diversified portfolio with lots of managers, lots of assets. And so with only one manager in the space and only one fund and only one asset, that wasn't a great pitch for allocators. So the huge change is now there's, half a dozen, very reputable firms in this space. Each of those firms has 3 or 4 funds. Each of those funds has 20 or 30 assets in it. So an allocator can now build, a very robust portfolio with several managers and tokens and venture and, some things that are liquid, some things that are illiquid. And so now you can do that. The other big problem when we started this industry 8 years ago is custody. Custody, was, no regulated custodians existed, back then. We then invested in Zappo, which was the largest custodian in the space, and it's been acquired by Coinbase. But still, there wasn't a regulated custodian out there. And now Coinbase is, highly regulated. We have Fidelity, the New York Stock Exchange has created a company called Bakkt that does Bitcoin custody. And then you also have CME and CBOE that do Bitcoin futures. So that was really the last, solid reason why an institutional investor could be worried about investing in this space or not want to bring this to their investment committee. But with regulated custodians now serving this space, it's very easy to make allocations. I think that's why you've seen an explosion in very sophisticated investors like the major college endowments investing over the last 2 years.
Okay. The following two topics, I think a lot of people, they make a lot of noise in the crypto space, and I think a lot of people have certain concerns about them. So the first one is, what do you think about central bank digital currencies, and how could they affect the crypto market? Do you think they could serve a certain role in the industry or not?
Yeah, I think you put it very well, that they're going to serve a role, but they're not going to take over the entire industry. And I think there's almost a religious view in crypto that it has to be just one thing. It has to be just Bitcoin or just Ethereum or just Ripple or whatever. And I think we should all get comfortable with the view. There's going to be probably about 10 really important types of tokens or cryptocurrencies in the future. Some will be very volatile like Bitcoin and Ethereum. Some will be stable coins that are pegged to other currencies like USDC is essentially pegged and backed by US dollars. And then some will be issued directly by central banks. And so they all have their different uses. And an example of why they would be very useful is in the United States, which is obviously supposed to be one of the most sophisticated countries on earth. It takes 3 hours to send FedWire money. And so even the most sophisticated bank trying to send money across Wall Street to another sophisticated bank, physically sending it 100 yards takes 3 hours. So a central bank cryptocurrency token would be fantastic. You could, send it in a matter of seconds. And so I think they will be very popular, but they certainly aren't going to solve all of the issues. And so the existing cryptocurrencies like Bitcoin and Ethereum will be, still have their use cases, very important. And the issues like central bank digital currencies or even like Fidelity's Libra project, to my mind, those are all very positive. They're bringing exposure to the cryptocurrency space and bringing potentially billions of users into cryptocurrency, and that will ultimately lead to more people using the existing cryptocurrencies, Bitcoin and Ethereum, Ripple.
Okay. And the other topic that a lot of people have certain concerns about are regulations. You have already said a lot about this topic, but what are the concerns that institutions have expressed to you when considering allocations to Bitcoin or digital assets as a whole? Is there market infrastructure ready for institutional adoption?
Yeah, it's an important question, but I would say that one is pretty well behind us. That 6 or 8 years ago, the regulatory environment was very uncertain. We really didn't know where it would go. But now, 50 million people or something have cryptocurrency. All the countries on earth have dealt with it in one way or the other. Most have been neutral. There have been a few countries like Luxembourg that are very progressive in trying to promote cryptocurrency, but most countries like the United States, they don't do anything to help it, but they don't do much to hurt it. And I think the final bit is sorting out the security laws, particularly in the US, about cryptocurrencies, which is kind of half done with the initial coin offerings that have been popular over the last few years. And then, ultimately, ETF certification needs to happen. So there's a few small things to be wound up, but from an institutional investor standpoint, I think we have enough clarity that it's an asset class they could invest in, and that they could feel confident that, there really aren't any gating issues. And you hinted at one, the market infrastructure, and it's been talked about quite a bit, and even the chairman of the SEC has mentioned supposed market manipulation in Bitcoin. And I personally believe that's a bit overblown. That there obviously are some exchanges, particularly in Asia, that do fake trades, basically wash trades to inflate their volume and to make it look like they're more popular than they are, and to push their exchange up in the league tables. But if you're talking about regulated exchanges like Coinbase or Bitstamp or the CME, there's no fake volume going through those, and there's often kind of mythical tales in the industry about Bitcoin whales that are controlling the price and pushing it around. And to my mind, that's ludicrous. The market's worth $300 billion. There's nobody that's big enough to push around a $300 billion market.
How do you expect the crypto space to evolve in the following 3-5 years? And this is another question that I personally have. Where do you think we need to evolve the most? It could be on a technical level or on any other factor.
Yeah, that's a great question. I like to remind people that big disruptions don't happen overnight, and it's very popular to say the internet took 20 years to happen and to go from kind of the primordial email type stuff to Uber and other more useful applications. But the reality is it actually took 20 years for TCP/IP to just even get to the browser, right? And then it took another 20 years to get to where we are today. And so technology does take a while. Bitcoin's 11 years old, so it's it's been around for a while, but we still need scalability issues that I mentioned before to make it very, very useful. I think that over the next few years, you're going to see most of the major blockchains scale, either on-chain or some kind of off-chain way to scale. And that's the remaining technical issue, is to be able to do more than 10 transactions per second. And there are some blockchains that already do, thousands of transactions per second. And there are new blockchains coming out, like Polkadot and others that will allow much more transaction flow. So that has to be proved out, but the rest of the building blocks are essentially there, and that's why you're seeing an uptick in usage. That's why you're seeing more institutions investing in the space.
Okay, so we started the conversation with Bitcoin in 2020. Now, to sum up, I would like to talk about some price predictions that you did in the past. So maybe you can tell us a little bit more about your 115K stock to flow analysis prediction that you made in the previous months.
Yeah, so Bitcoin has a unique feature in the money supply being defined, and you know exactly what it's going to be. Very different than the Federal Reserve or any other kind of paper money system. And the formula is the original days, 50 Bitcoin were issued every 10 minutes. And then every 4 years, that number is cut in half until ultimately 100 years from now where there's no more Bitcoin issued. And so we've had 2 times where the number of Bitcoin is cut in half. And as you would imagine from the law of supply and demand, that if you cut the supply of something by 50%, with constant demand, it probably goes up in price. And we've seen that in the first 2 halvings. The first one, they were cutting out half of the supply when the stock that was outstanding was actually relatively low. There's about 10 million Bitcoins outstanding when it was cut. And so over the next 440 days, which is a period that's important for halvings, that cut about 15% of the total stock out of the new supply. And so it had a big impact on the prices. Prices went up 9,000%. So 4 years later, the halving was, of course, half as big, so it was a less impact. And then the amount of Bitcoin outstanding was much more. There was about 15 million Bitcoin outstanding in the halving in 2016. So that cut out about 5% of the total outstanding stock. And the impact in the markets was at about exactly a third as big as the previous one. So the halving that we are going through right now cuts out about 2% of the outstanding stock. So it's about a third as big as the previous one. And if these ratios repeat themselves, which obviously history doesn't have to repeat itself, but it often rhymes, that would mean that the price of Bitcoin would go up about 10x over the next year and a half. And I'm not saying that's my, bet your entire life savings on Bitcoin achieving exactly 115,000, but I do think it's a very high likelihood that Bitcoin goes up a huge amount in the next 18 months. In addition to the halving, we have obviously the global macro stuff that we talked about earlier. You have all these institutional investors coming into the space. And then Bitcoin's still at less than half of its previous peak. So it's not like it's expensive yet. We think it's actually very, very cheap to its long-term trend regression. So all those factors combined make us as bullish as we've been in many, many years.
All right. Well, we have covered all the topics that we had on the agenda. Thank you so much, Mr. Morehead, for being here. It was very nice to meet you. And yeah, we hope you enjoyed this as much as we did. And we'll see you next time. Thank you for joining.
Thank you, Catalina.